Shalom. First and foremost, I'd like to give all praises and glory and honor to Yahweh Ba'ashem, Yahweh Shai, Ba'ashem, Wakar Kadash. Noble honors to the elders, apostles of the Millstone, preaching word, truth, and sincerity. And shalom to the Akim, scattered through the four corners of the globe, preaching word, truth, and sincerity. And shalom to the Akim, scattered through the four corners of the globe, preaching word, truth, and sincerity. And shalom to the Akim, that be like unto the speckled bird, preaching word, truth, and sincerity. And I say shalom to the Akim out there. And this is in the news, even though this is from yesterday, because today is the 19th. This was reported on July 18th, 2022 at 3:02 p.m. And this is from Yahoo.com, Yahoo Finance. And this was published by Alexandra Simosnov, if I pronounce her name right. And the highlight of this news on recorded reads from July the 18th, 2022. And it says, Stock Market News Live Updates. Stocks tumble as earnings season picks up. It says the U.S. stocks fell sharply into the final hours of trading Monday, following news Apple plans to slow hiring and curb spending next year to prepare a possible recession. The Bloomberg News reported Monday afternoon that the hiring is slowing down and cuts to spending will take place across central divisions and stem from a move to become more careful during uncertain times. Citing people familiar with the matter of asking to remain anonymous, shares of Apple closed down at 2.1%. The S&P 500 and the Nasdaq each declined roughly 0.8%, while the Dow Jones Industrial Average sheds more than negative 200 points, or 0.7% prior to the report. All three major industries hit a season high of at least 1%. The Wall Street Journal reported that the Federal Reserve signaled that they are likely to raise interest rates by 0.75%. 0.75% points later this month. Expectations for a 100 base point hike for the Feds as its next meeting on July the 26th and July the 27th rose last week after a hot consumer price index read for June. Bank of America, BAC, and Goldman Sachs round out banks results ahead of a trading session Monday. Goldman Sachs report smaller than expected, a 48% drop in the second quarter profits as losses were particularly offset by the strength in its fixed income trading business. Meanwhile, Bank of America saw its profit fall 34%, dragged down by a decline in investment banking revenue and amid slower deal-making activity. The results come after the financial sector logs the best in the trading rally since May on Friday. The buoyed by a notable second quarter, beating up Citibank a day after traders cited a disappointing financial from J.P. Morgan and Morgan Stanley. The J.P. Morgan chief, Jamie Dimon, cautioned on Thursday in a post-earning, calling that risk to the U.S. economy appears nearer than they were before, and said the outlook will depend on the effectiveness and the quantitative tightening and decisive volatile markets. Similar commentaries is expected from the leaders across corporate America this week as more companies reveal how their businesses held up during a volatile last quarter. Not only are numbers projected to reflect minor profits, but traders also bracing for a potential downward guidance revisions as companies outline the impact surge in prices, quantitative tightening, and war in Ukraine on their business prospects. The most important indication for the economy over the next few weeks will be earning releases, companies report guarding, and Chad Curry, head of iShare Investments Strategy. America is a black rock, said in a note. We will be watching to see what companies are still able to keep pushing higher prices to their consumers, in which sectors significantly revising down their earnings forecast for the future. Clyde Hurry added he will also be watching to see how the Musk recession risk will be noted in future earning calls. Over 70 companies are scheduled to release results this week. A big tech earnings are set to trickle, starting with the Netflix after market close on Tuesday, Tesla after the bell on Wednesday, and Twitter before the start of trading Friday. Monday's moves on markets come after a rally Friday saw stocks close sharply high as Wall Street attempts to shake off losses from the turbulent week wrought by June's shock CPI print still in the S&P 500 down and NASDAQ each closed the week lower. So due to the Federal Reserve, I believe, by the end of this week, starting July the 26th and the 27th, I believe they're going to be waiting on more reports, but highly than expected, they're going to raise the interest rates about 0.72, I believe, for what I was hearing through the news article. So, these businesses, they trying to shake off from that, that not so good report from the June report. So they trying to see in the month of July to check and see if they have a better or more solid report for these businesses and these companies that put their stocks and bonds and their trades and these in the Wall Street, and then the Wall Street, they've been dealing with the inflation from 8.1% down to 9.2%. It's been skyrocketed up the consumer pricing, for the month of June. So we'll see if it's going to continue to be like that in the month of July and the months on ahead, So, the NASDAQ industrial and the S&P 500, they was stocks fall once again than expected, as the Federal Reserve potentially going to raise the interest rates even more. Still trying to maneuver ways to slow down the inflation. And then the gas prices went down for the third or fourth week so far. But you'll expect to see as it increases potentially more and more, So with that, this was just as a when it comes to finance in the Wall Street. This is just as a news update in regards to this. Normally, I usually use to bring out scriptures for this, but in this particular case, I'm not gonna do it. But this was just a news update in regards to the Wall Street, with the inflation in the stocks and bonds of these businesses funding in the Wall Street, because the economy being pushed in with money as well too, along with the Wall Street, with the S&P 500, the Dow Jones, and the Nasdaq. Once again, as expected, it had the numbers had went down in the negatives, but potentially might expect to see it be that way, or it might have some type of gains with the stock. But it all depends on how the stocks, the Wall Street stocks, see how will it responds to what's going on in the world, especially with financially, with the Russia-Ukraine war, and then with the inflation, and then with the gas prices and stuff like that, and then with the Federal Reserves of the interest rates potentially might goes up than expected to 0.72% of an interest rate hike. So expect to see what the results gonna be for throughout this whole week and a couple of more months, the upcoming months in that regards as well too. So with that, I hope this lesson was edifying in regards to this situation from Yahoo Finance and the stock market. I hope this was edifying. Once again, like I mentioned, through the spirit, power, grace, and mercy of Yahweh Yahushua. And first and foremost, I'd like to give all praises and glory and honor to Yahweh, Ba'ashem, Yahweh Shai, Ba'ashem, Mukar Kadash. Double honors to the elders and apostles, the great millstone, pushing his word truthfully and sincerely. And shalom to the Akim, scattered through the four corners of the globe, pushing the word truthfully and sincerely. And shalom to the Akim, that be like unto the speckled bird, pushing the word truthfully and sincerely through the four corners of the globe. And until next time, I will say shalom and a ball.